G'day traders, Sam here from TradeToProsap to give you a Bitcoin review along with the SP500 and its correlation. Here I'm going to give you a pattern from Bitcoin that's going to make a lot of sense when I try to explain it. But for now, let's just look at when Bitcoin in 2017 got the top. We see that SP500 continued on for a lot longer, to about another month. Similarly, this top here for Bitcoin, we saw the SP500 continue on. So there's a delayed effect. But Bitcoin, as a risk asset, as it's a risk asset, and therefore it's likely to drop before the SP500. And that's what we observe. Similarly, at the bottom, when we look at Bitcoin at the bottom and SP500, in one or two cases, the SP500 is actually way ahead in terms of the bottom. So here we've got the bottom and price is just continuing on. Here we've got the bottom. It takes a while for the risk assets like the SP500 Bitcoin to catch up to speed. So it's worth noting in this incident, when the SP500 is bottomed, Bitcoin is delayed. Here, Bitcoin, SP500 pretty much bottomed there, and that's the 16th of March, and that's the 9th of March. So Bitcoin dropped earlier, but on the 16th of March, Bitcoin started to go up, and SP500, okay, 23rd of March. So that doesn't quite help us there, but in this case it did. Here it didn't with the black event, COVID. So what I'm looking at is potentially if the bottom is in, there is going to be a delayed effect. With the SP500 or the Bitcoin, it took about a month or less to, so what is that? That is 8th of Feb and December, late December. So about a week or 2 weeks at most for the bottom to, or Bitcoin to catch up with the SP500 in terms of the bottom. So we might have that event as well. So that's going to be a luxury if that turns out to be the case. But here, the COVID event didn't give us any time really to respond. Just keep that back in the mind. So now let's look at this Bitcoin and the main thing I was trying to look at or articulate. So the pattern for Bitcoin is this. So we look at this pattern. It's not a hard pattern. The bottom to the top, just get this channel, and then we find some look for confluence, and we had it. And that seems to be the case at the moment. And if I was to subdivide this into two channels like that, you can see previous, so halfway between that top channel, we find support all along, and on this one as well. And this is resistance before it becomes support. Now, if we add Fibonacci to it, you'll see a lot of confluence coming into it. So just making the reference from 0 to 1, you can start seeing, okay, areas, even here, you can see what areas of Fibonacci took place, and you can see exact area of resistance, and similarly, you can see very clearly confluence with this line here as well. And obviously, these two line up very similar, so you got that as well. If I was to move this channel that I had and move it across all the way and keeping that discipline, you can see how that acted as support, interesting enough. And when we lost that level, we dropped. So this was acting as support, and once we lost that level, we dropped. Now the other half of that channel. Here, similarly, when we lost this level, we dropped half. So it is consequential, but if we lose that half, if we lose this level, it's likely to come to this Fibonacci or this Fibonacci as the bottom. And that pretty much explains the big moves, pivot points. Either there we find the bottom, or there we find the bottom. That's two levels I'm looking at. So that is conditioned that this drops. I'm mindful of time, so I don't want to drag it on too long. Here, and this is where I'm being focused on now. Here, when we drop, we hit that bottom, we find our first relief rally in a bear market. So this is a bear market, it's a downtrend. We find relief, we find perfect resistance, and if I was to add Fibonacci to it, it's probably equate to some Fibonacci level like 618 or 786. And then we drop again. So we got one touch, second touch, and then third touch and fourth touch. Similarly, we dropped here. So we're in a downtrend, very no different. We've come down to the one touch, two touches, and this is where I'm looking. I'll be watching carefully to see how this candle comes up. If it breaks this level here, then this is invalidated, then we're going to go bullish, and which makes sense because then that's pretty much a change in trend on the weekly. So that's a given. But at the moment, I don't see this happening anytime soon, although October is a bullish month. And here, September, then October is a bearish month. So it's not always the case with Bitcoin. With the SP 500 or the other stock market commodities, it seems to be they've been calling it a bullish month for October and November. Here, in a bear market, Bitcoin wasn't. So be mindful. We got this moving average. Now let's have a closer look and see how we measure this. So that drops, we get our level. Let's just zoom in. So after our first touch, second touch, it hits a 618 from the macro. Top to the bottom, the 618 acts as a golden ratio and its resistance. And that's our lower high, right? So we've got that lower high, we've got that lower high, and you can see all the way up. And then we get 1 week that undoes all those 3 weeks of movement. And then we get the 382 Fibonacci level. So now we're going to look at, so this is all about planning and see if it aligns up. So if we do the same and apply the principles here, we'll see how this weekly goes, but adding the Fibonacci. So we've got our 618 already done, right? That's our lower high. That was our first and second. So if we just look at the previous reference, so far so good. So we had our, just to remind you, we had, once we came down to this level, we had our first touch and then our second touch. Similarly, we had our first touch and we had a second touch. Second touch got the rejection at the 618. Second touch got the rejection at the 618. So with all intents and purposes, on the weekly, if this, and you can see how this aligns with the weekly level, that's our weekly level there, with the 382. So far, so good, but it's aligned. And that is our weekly level, but the 382 is slightly. So let's just go into the 2-day, make it a bit closer. Yep, so our golden ratio was the rejection area. The 382, if Bitcoin comes to this level and gets rejected, it's going to be in synchronization with the 2017. So, and to boot, it's right on the trend line. As you can see, this trend line, the 382 is smack bang on it. So if this comes to there and gets a rejection, and if we see the weekly candle come all the way down, it's very much dancing with the 2017 scenario over there. And then get this grind line. And if that's what we're seeing, guys, if we start seeing this type of motion, it's likely to drop to the next level, Fibonacci level. And in our case, in the past, that halfway point, it dropped much harder than the halfway point. It came down all the way to the bottom of this. So that will be equating to that. Okay, so we've got to see if this plays out. Then we've got a what do you call a fractal. Yep, that's the word. We've got a fractal that is reminiscent of that era. And if you go back to my commentary on this, in the past, I did say that if we look back, give me a sec, guys, while I just flip this over. And here we go. We hit our top. That's a 2008 home mortgage crisis and banking crisis as well. We dropped to the 200 moving average, hit that on the weekly, hit the 200 on the dailies, and then we lost that level, and then we capitulated, and that was a 57% drop. So if we were to do the same here, where is that? There we go. If we say 50-something%, give or take, that's down there, and it's doable. There's a lot of banking issues out there as well, and inflation and mass printing. So quantitative easing kicked in here after the banking crisis. So when we capitulated, would they allow it to happen again? Why not? And that's when quantitative easing came in, mass printing of the money. So at the moment, inflation is pretty bad, not as bad as here. Sorry, this wasn't as bad. Inflation, this was just, I suppose, banking crisis. Here is in mortgage, inflation crisis and interest rate crisis. So it's likely to drop. When would the Fed kick in for quantitative easing and mass printing? If it kicks in like that, our inflation rates are going to be still high, unfortunately. But the key part to this is the 200 moving average on the weekly. We lose this, we're getting the bounce. So here they had a relief rally bounce. Here we're likely to have a relief rally bounce, and then very similar. And we had the kiss of death on the 21 moving average. So if we look at if you haven't watched my other videos on this, the 21-month moving average. So we just go to a monthly, just to quickly sum it up. And that will be pretty much explained. What we had is, once we had the 21-month, actually got to add that in, don't I? Moving average, give me a sec. Go again. So our 21 monthly moving average, this is the story. Once we lose the 21 moving average and we come back and get a rejection, we go down a lot. So that's our 21 moving average there. Similarly here, once we lost the 21 moving average, we get a bearish candle, a rejection, kiss of death as I call it. It goes down. And we had that just now, this month. We got the rejection on the 21 month moving average. We almost got it. We got the kiss of death and likely to drop. This month is that green candle's early. It could turn out to be a red candle for the month. So be mindful of that. Until we pass that 21 monthly moving average, I would not go bullish on the stock market nor crypto. So that's what I have at the moment. Hope you like it. Hope it gives you some direction and planning. And please give me a like and share and come and join our community. Talk to you soon. Cheers.